You're listening to the audio portion of Workshop Wednesdays. Workshop Wednesdays is a free live discussion about topics affecting accountants, bookkeepers, and business owners. You can join the ABO group in Facebook to participate live Wednesdays at 10 a.m. Pacific Time. Just search for ABBO in Facebook. This podcast is brought to you by Schoolofbookkeeping.com, where you will learn, grow, and build a thriving bookkeeping practice. We have hundreds of lessons with almost every aspect of the industry. Start your free month today at Schoolofbookkeeping.com.
Welcome to another Workshop Wednesday brought to you by Schoolofbookkeeping.com, where it is casual conversations for serious workflows. And I say that I laugh because I'm wearing slippers. So why not? What's more casual than that? So anyway, hi, Rachel. Good to see you. Are you wearing slippers? There you go.
Of course.
Well, there we go.
I'm not wearing pajama pants on the bottom. That's how I roll.
That's right. That's right. You only need to be professional above the Zoom line in the States.
And you never know what you're going to get.
No. Exactly. Yeah. Well, if you're watching, what do you wear about below the Zoom? I'm controlling the comments. Yeah. I'm just a little frustrated or fascinated with technology today. I'm at my son's house. You may notice the background looks a little different. I'm not in his living room is a little small, and that's my office while we're in this recovery phase. So we moved the dining room table over to make room for the Christmas tree, which the cat loves.
Oh, Lord, I'm getting started. My dog is going crazy for archery.
Yeah. And he just got this brand new fiber internet, which is super delicate. So the cat and the Christmas tree and the fiber optic is a little bit of a challenge. So
I thought you were going to say a fiber optic tree. Have you seen those?
Oh, yeah. Yeah. Those are really neat.
I love that.
I would just stare at those, and then especially when they have a cycling color goes through them. Fantastic. Yeah. Anywho, so I couldn't post this to the ABO Facebook group, so we'll do that later.
Because you want me to right now?
If you could share it, that would be great, because I got Facebook said something went wrong.
Yeah, I did too. And actually, but I'm doing it anyway. I'll post it right now.
Awesome. Super. Appreciate that. So today we're going to be talking about some inventory considerations when you're migrating from desktop to online. Right. Rachel and I have a specific use case because we're working on this client together that's moving from desktop to online with a couple of their QuickBooks files. And we discovered some things that we didn't even realize were a consideration because it's a surprise. But first, we want to talk a little bit about just the differences in inventory management between QuickBooks Desktop and online. And we've been doing this series with Katana and Sean at Katana talking about the advanced inventory. But here we're just talking baseline, I buy stuff, I sell stuff, fundamental differences between QuickBooks Desktop and QuickBooks Online when it comes to tracking, right? So we have on the school bookkeeping site, I wrote a blog, and then we have a landing page, all the things, inventory. We even have a course about inventory there. I'm putting up where is it there? The QR code there for our page, all things inventory. I wanted to share it here just real quickly. Over here, there we go. So we have all things about advanced inventory on this page where we comb through just the enterprise level advanced inventory functions. So you can check those out there. And we have this compare inventory features by QuickBooks version, where you can expand that, and it'll show Enterprise, Desktop Premier, Desktop Pro, and Plus and Advanced, and you can scroll through all of those features. And
I just want to add, because I know that there's a lot of folks that are like, it's not apples to apples. And as I usually always to say is, yeah, in desktop and desktop enterprise, you do a lot of the inventory function in that software, but in QuickBooks Online, we're using a lot of external inventory apps in importing all the stuff into QuickBooks. So although I know today we're going to talk about some of the stuff you can do in QuickBooks Online, for any of the folks that are like, oh, you can't do any of that stuff.
Yeah.
Totally get it. And we do, I just want to mention, we do a lot of the things outside of QuickBooks in.
yeah, that's usually if you have some specialized workflows that you're already doing in QuickBooks Desktop, either just in in Enterprise or even Premier, that don't transition to QuickBooks Online, that's typically, if you still need to do those things, then you're going to be looking at some kind of inventory management solution to be able to handle that. And then you're not even going to be concerned about the inventory functionality in QuickBooks Online. You're mostly concerned then with the financial impact of that inventory movement posting into your QuickBooks. And that's where it can be flipped.
Moving to a new way of where all the cloud-based software is living.
Yeah.
Now it's moving from a desktop-based thing, maybe a whole all-in-one solution, into a couple different disjointed things that all work and funnel all the info into QBO. And I can't get Facebook to work right now. I'm going down.
Okay.
It's not cutting out. It means that my internet is fine. And I think it's probably that.
I remember it was like a year ago when Facebook went down for 6 hours and people were losing their minds. But how am I going to get my fake news?
How people got through that.
But we have also a blog that I originally wrote on the Firm of the Future blog, and I repurposed it again and added a little bit more on our School of Bookkeeping about managing inventory specifically in QuickBooks Online. So you can check that out here from this page. And look, there we are down at the bottom. So you can always sign up for the workshop if you're not there. It's redundant telling people to sign up for the workshop on the workshop, but that's also for.
I'm glad you mentioned that for people that do manage their inventory in QBO, because especially with e-commerce people that are maybe only on one channel, it can be done. You can't rule it out.
You don't necessarily have to discount it just because it doesn't have assembly items, for example.
Exactly. Yes, like you said, if you're buying stuff and reselling stuff, it can be done. And sometimes it's suitable. And as long as you're date with all the limitations we rule like that, which we're here to tell you.
Okay, now let me turn this off there so we can put us back together there. Okay. Just want to bring up my notes here. So we've got the blog, we've got the course. So the main differences between desktop and online is something that I learned at the latest Intuit Connect. I almost said QB Connect there for a second. But at the last Intuit Connect, I sat in on a breakout session, and Deb Deffer was actually leading our table discussion. She mentioned something that I never even considered in all my time of doing conversions and migrations. There is a fundamental difference with the way that QuickBooks Desktop calculates costs and QuickBooks Online calculates costs. So
do tell.
Yes. So inventory cost calculations in Pro, Premier, And Enterprise, with the exception of Enterprise Platinum, is weighted average, right? Easiest way to describe that is just however, because costs will fluctuate, and costs fluctuating on the up is a hot topic these days. Okay. As costs go up or they fluctuate over time, as you're purchasing that, you want to get a better understanding of that cost. And there's 3 or 4 major ways to do that. And they all have their pluses and minuses, pros and cons, right? So what QuickBooks and a lot of inventory applications tend to rely on, just to give the basic fundamentals of spreading out your costs over time, is weighted average. And it's not just an average, right? So if you bought one item today at $5 and 10 items tomorrow at $10, it's not the average of $7.50. It's taking weighted that the 10 at 10, the individual widgets purchased at $10 each, and that one that was purchased at $5. So it'll be closer to the $10 range because you purchased more, or you have more in stock that are at the $10 level than the $5 level. So that's what QuickBooks Desktop is channeled around when it comes to that. It's the weighted average. So you will always see your inventory valuations based on the weighted average of what you currently have in stock. And you will see your cost of goods entries when you sell those items based on the calculated weighted average at that time. Doesn't mean that you can't be prescriptive of the costs at any given time. You just have to make an adjustment or a valuation adjustment at that time. And QuickBooks is really flexible about and being explicit about what that cost actually is. And you can do a cost recalculation at any given time. At this moment, if we're coming up on the end of the year, you're coming up on January 1st, and you want to reevaluate your inventory, you can do that in Desktop.
Yeah. And fun fact, some people even recalculate the value of your inventory on something like LIFO. You can put your taxes that way, but you can't calculate your inventory that way. But I don't know if you remember doing actual weighted averages in high school math, but I do. I can't remember how to do it now. I'd have to look it up on ChatGPT.
Yeah. But just know that QuickBooks, that's how it does it.
Standard.
And that's the standard. So with the exception of Enterprise Platinum Edition, as we had talked about, it's the only version of QuickBooks Desktop that allows you to do FIFO, which is first in, first out. And we had talked about this with Sean about the cost calculations, and which is the, better way to do that. The challenge is with FIFO is that if your costs are going up, you won't see those costs hit the profit and loss until the lower costing inventory is sold, right? So there's this lagging indicator of your costs.
Yeah.
It's first in, first out.
That's why larger companies sometimes will opt to do it with LIFO to reevaluate it. But does Platinum, you said, right?
Yeah.
Does Platinum allow you to pick either weighted average for FIFO, or is it short FIFO?
In QuickBooks, it's a checkbox and a date. So you could basically reevaluate your inventory from weighted average or FIFO. I wouldn't recommend doing that on a regular basis, because that means it has to recalculate everything. Yeah. But you can choose different dates for the cost calculation.
Even in Platinum.
In Platinum.
Okay. But from the beginning, let's say I'm starting out a new one, I can choose between those two. Yeah.
Yes. And so really with regards to QuickBooks, those are the only two methods, cost calculations, that you have. Now, QuickBooks Online solely will do FIFO, right? It's first in, first out, right? That's the way that cost calculations are going to be calculated. You do not have any choice in the matter when it comes to that.
But
And
FIFO is the moon, right? And weighted average are the most widely.
yeah, yeah, they're the most common of the two. So you just with QuickBooks Online, you don't have a choice. The only time that you have a choice is if you're using enterprise.
Right.
So that's that, right? So if you are using anything but Platinum Edition, as far as your cost calculations, and you decide to move from QuickBooks Desktop to Online and you're tracking inventory, you are now putting yourself in a different cost calculation method, right?
Yeah.
So there is a tax implication for that that you need to consider and be aware of, because QuickBooks, if you're filing based off of weighted average as far as your prior tax returns, and then come October, you decide I'm moving to QuickBooks Online because I'm not going to pay $999 for Pro anymore. Might as well pay $999 for Plus, right? But if you move mid-year, your cost is going to be vastly calculated differently, especially when there's fluctuations with your costs from your suppliers. So what Deb was saying is that what she does when she migrates anybody that has inventory is, and this is interesting, I'm going to actually try it out since next time that I do this, is that what she does is she zeroes out the quantity. She does a quantity adjustment as of whatever date they're doing the conversion, and
Okay.
put everything, and I can't believe an accountant said this, she puts the adjustment to opening balance equity.
Oh,
So-
placeholder.
Yeah. And it's just for a placeholder, right? Because she'll zero out the quantities, and the total value that whatever QuickBooks has calculated up until that point would be zeroed out, and that will go and show up on the balance sheet as opening balance equity. Then she moves them over, and she chooses not to move over inventory, which is, again, it's another challenge, right? She doesn't move them over as inventory items. And this is where I'm not quite sure of the nuts and bolts behind it. But when you choose not to move over inventory during the migration from desktop to online, what happens, and this is what we discovered in a project that we're working together, Rachel, is that those items still get created in QuickBooks Online, but they get created as non-inventory items. Right. So at that point, you can turn them into inventory items, be explicit about your start date.
I like that.
And then you're able to do a physical count,
Yes.
on that date, set up the items the way that they, currently have, and then you're able to pick that FIFO start date from that day. The challenge is you need to tell the IRS you're doing this differently. So there is a form, or there is an issue with being able to just transition from one to the other without informing the powers that be before they figure it out and then send you a nice little notice.
Is that based on your filing entity?
Yeah, it's however you have initially told the IRS that you're calculating your costs based on X, whatever that happens to be. If you decide to change that, then you need to let them know about that.
Yeah.
The challenge is that you need to inform them, right? Because from the moment that you start using QuickBooks Online, for your inventory, it's now FIFO. You don't have a choice, right?
Wow, I feel like it might be more of a thing if you're a C corp and you have your own return. I think if it's a pass through and it might not.
Yeah, I by no means
As
do
much or
process.
it's only because your balance sheet isn't taken into consideration in a pass through entity. So I have a feeling it's probably just for a C corp, but I can find out.
Yeah, that's a good point. So those types of things are considerations to know, but the notes here, that's the biggest thing to be aware of. Now, there are things.
That's it, by the way, because I feel like it just gives it helps you avoid a lot of problems. Oh, these 4,000 things were all created as inventory items with potential negative quantities. You know what I mean? It's like I'd rather have the items come over as non-inventory items without a balance. And then I have the flexibility to spark that however I want.
Yeah, because this will avoid future surprises, which we have discovered that there's a couple surprises in this with this project that we're working on, because negative inventory quantities, as they're not necessarily a terrible thing. You normally, and when we talk about negative inventory, we're not talking about the disposition of this guy is not a positive person. We're talking about where inventory quantities show in the negative, right?
And it doesn't happen in real life. So when you see negative inventory on a piece of paper, you're like, oh gosh.
Yeah.
And some systems don't allow you to have a negative inventory just because it can be such pain.
But there are some real world situations that cause QuickBooks at any given time to show of an inventory quantity on a negative, right? So if they create an invoice today on something that they don't have today, they're going to order it and they're going to receive it a month from now, right? That sale decrements the quantity on hand of that item in a negative way, right? So it's negative. As long as there is a cost associated with that item and things of that nature inside of QuickBooks, even in QuickBooks Online, as long as there is a cost associated with that item, the sale of that item is not negatively impacted, right? But when there is a situation where they create an item, there's no cost, there's no on-hand quantity or what have you, there's nothing to tell QuickBooks that there was a cost associated with it, they could potentially be having a negative or a ghosting cost because it doesn't decrement in the asset and it doesn't increase cost of goods sold because of the sale.
And the fact that it lets you have that negative inventory, would that lets the cost of goods sold be recognized at that point of sale? Because a lot of people are doing that with like kind of a quasi drop ship workflow. So they do the invoice first and then the purchase. But that if that purchase isn't there, they want to do the sale first and recognize those COGS. But if the item isn't physically there yet to be received in, there's other systems out there that won't give it a cost of goods sold. So the fact that QuickBooks allows this is actually a good thing.
Yeah. And then there's the whole ramifications of negative inventory in the desktop world. It tends to cause data damage. So because it's thrown in a negative space, that could potentially cause some data damage when it comes to any kind of condensing or anything that's file specific, updating the file from one version to another and those types of things. Negative inventory, if you're in a condition, it's like having an open wound on your arm and then trying to go swim in lemon juice. Probably painful.
You want fun?
We'll let that image just sink in
So I just want to say though, when people do that, they're making the sick because like in ideally what he would do is he would make a purchase, receive those goods into inventory. Let's say you made a purchase of 5 widgets. You then received those into inventory. Now I've got 5 that I can sell. Then I create an invoice and I can sell buy 1 or 2, 3, 4, or all 5. And then that'll deplete my inventory back to 0. But what we're saying is the opposite direction is we're going to give an invoice first, starting with 0 widgets, deplete them down to -5, and then make the purchase and bring them back up to 0. So a lot of people do that, by the way. And so it's actually nice that this allows you to do that. Oops.
So having a negative inventory isn't such a terrible thing as far as the cost of QuickBooks allowing you to do that in the
Following
desktop realm. But
what's
if you're
happening, you're always bringing it back up to 0 and you've got a handle on it.
Yeah.
Otherwise, it can spin out of control.
Now, what we discovered during this project that we're working on is that if you never get it back to 0, that could be a challenge. So, in this particular instance, they're a consignor of art, right? So they never would actually tell QuickBooks that they received it because they never actually held it in stock, right? So they created all these inventory items and then sold them, which then would handle the accounting side of what they would need it to do. So they served a purpose by doing it this way, but they never received it in on hand to zero it out. So they had thousands of items.
Just continuously reducing in perpetuity without putting it back in.
Now, the problem is that when you try to do that migrate inventory items from QuickBooks Desktop to QuickBooks Online, and they're in a negative, QuickBooks Online doesn't like that at all. Right. So it would not create those items at all. So this, going back to the other option of not bringing over your inventory items at all, allows QuickBooks to create those items and handle the accounting side of things for those historical transactions, but just as non-inventory items, the non-inventory parts. So it handles the accounting and the financial impact of those prior inventory items just as non-inventory. And then you can then pick up from that date moving forward if you want to still make those items inventory items if you wanted to, but it cannot create the item if it's in a negative inventory state. So that's something to keep in mind before you even go and move it over. And then you have your choices, right? You can either correct the negative inventory situation in desktop and then allow it to move over as inventory items if you wanted to, or not bring them over as inventory parts and then pick up from that point to move forward as turning them into inventory parts inside of QuickBooks. And we had a workshop of how to do that in a mass using the spreadsheet sync. So you can do that pretty quickly. I wouldn't say quickly, but it's less than working through each particular item. And then another project that I was working on where things came up is that QuickBooks Desktop allows you to inactivate items even if they have a quantity on hand.
Oh, you can't do that in QBL.
Sure. No, so that's a fundamental difference between the two. Anything that you inactivate that affects a balance sheet account inside of QuickBooks Online has to zero it out first. Right. And so if you have a petty cash account, that's a bank account, and you just want to inactivate it, you're not using it anymore, and there is a balance. When you go to inactivate it, QuickBooks says, hey, there's a balance. I'm going to zero that out first. And I mean, not so many words. I'm paraphrasing QuickBooks. but it creates an entry to zero out the balance to zero and puts it in our favorite account of opening balance equity, so that you can determine what you want to do with that balance. The problem is that if you inactivate an inventory item that has a quantity on hand, you didn't take care of that balance first, right? So in order to make sure that everything matches according to the balance sheet, QuickBooks will try to create that item, see that it's inactive, and then try to zero it out. It can't, right? Because now you're making an adjustment to your financials that didn't exist in Desktop.
Right.
So that's something else to also keep in mind, is that, do you have any items that are on your inventory list or your item list that have quantity that are just happen to be inactive? Because in Desktop, if you want to make it inactive, go ahead. It'll just hide it on the list. It's just when those inactive items that have a quantity try to come over to QuickBooks Online, that QuickBooks Online and the migration is just going to say no.
What will happen to them? Did you just say what will happen to them? Will it just error out, or?
Yeah, it will skip over that, and that import summary that you get will look horrible because it'll have that comparison between what's in online and what's in Desktop. You're going to see a huge discrepancy between cost of goods sold, and
Okay.
because those items wouldn't be created because they can't. And then any transaction that they were used on subsequently can't be created. You've got a whole domino effect or spider web of transactions that are not going to make the journey from Desktop to online because of this situation.
Why would you have inactivated items in Desktop if there's a value sitting on the balance sheet?
Really good question.
Maybe we don't want anybody using it anymore. You're okay with having those widgets there, but you don't want anybody.
Maybe the accountant made an adjustment to the value of the inventory, but didn't do the prescribed workflow to zero it out first before taking that. They just saw that there is an option, right? This is where you cross the line between could or can and should, right? Like,
Yeah, because if you've got those values sitting on your balance sheet of those items, you want to be able to create an invoice to sell them potentially with an active item.
yeah,
Otherwise, it's just sitting there.
yeah. Like maybe you're a seasonal business and they're no longer an active thing, and you already took care of your physical count in another way rather than that particular item.
Yeah.
So then I don't want to see that on my list anymore and potentially sell it. So I'll just make it inactive, which will hide it in terms of, so there's no financial impact in Desktop by inactivating
Why
things.
not? Okay.
Just
I'm
for,
going to create an inventory adjustment and send it to the P&L
exactly.
like it would in QuickBooks when you zero it out. And
Yeah. And online, it's going to, anything that has a balance is going to need to be adjusted to zero before it does that. So ideally you would want to do that and be explicit about it. Otherwise it's just going to go to opening balance equity, and then you have to figure out where you want to put it. So those are just some of the key considerations when you're dealing with inventory. If you are considering moving from Desktop to online, this has nothing to do with any of the features that you might be using in Desktop that don't necessarily transition. This is just making the journey from QuickBooks Online or Desktop to online so that your financials are match, or at least pretty darn close. So if you have those differences, so one of the things about fluctuating costs, it becomes QuickBooks will ask you, what day do you want to start cost calculations at FIFO, right? And typically you would want to choose the beginning of the year because you're probably going to tell the IRS that this year is when we're using FIFO. However, if your costs fluctuate, your balances are not going to match likely because of the weighted average cost calculations that happened after the date that you're choosing your FIFO date, right? So the way that you will get an exact match when it comes to inventory is choosing the date that you're doing the conversion as your start of your FIFO date.
Okay.
That way it's going to match.
Right.
It's going to say anything that happened prior to the date, whatever QuickBooks Desktop did to calculate that cost, that's what I'm going to use.
Yeah.
Right. Whereas
You're basically having your ending inventory valuation balance of when you came over from desktop open up your inventory valuation balance starting on day one of QBO.
which then goes back to the whole Deb Deffer workaround where she would actually zero out the quantity.
Yeah.
And then choose that date, because then that's now an event to say, hey, I'm gonna pick up from this day. I don't even know if these are accurate, these accurate counts in desktop, but I'm gonna make sure that's accurate over in QuickBooks Online moving forward.
And I like that because if they're gonna do a count, it's in there's I always say, please get a count. That's a really good way to use your account and start it as it actually is sitting on the floors. I was going to ask you, so I always thought it was pronounced defer, like I'm deferring my taxing. It's defer?
That's the way I've heard it pronounced. Where if you know something different, maybe we should have Deb on, and at least just to, or maybe we'll go and look at her Facebook page and then see how it's pronounced.
Yeah.
Where they have that, how do you pronounce my name? If I'm saying it wrong, I apologize.
No, it's probably defer. But I did want to add one thing. So for anybody, I have a lot of conversations about people that are switching from desktop to online, and they will not be managing their inventory online. It'll just be valuations. And in that situation, you do not want inventory turned on. So make sure that you understand that fundamental rule is that inventory balance, yes, but inventory items, no.
Yeah.
Because you'll screw everything up.
Yeah. And then if that's the case where you're not tracking inventory, just decide not to bring it over. And that way QuickBooks will bring over the history, and it will bring over the historical financial impact, however it occurred inside of QuickBooks Online desktop. And then you can then pick up and move forward from there.
Yeah, because presumably you're going to do your inventory in an INS, and then when the items go in there, you've got a starting balance, and then whatever your balance is on your balance sheet in QBO, you could always do an adjustment to make sure that those two things are jiving.
So I think we'll put a pin in this one, because hopefully it's some good nuggets of information about inventory and cost calculations and how the differences between QuickBooks Online and desktop and how that kind of transitions between the two. We are, again, just as an announcement, we are turning our workshop, our webinar into as eligible for CPE very shortly. I'm still working with the folks over at Earmark to get that set up. But typically what will happen is about 5 to 7 days after the workshop, they'll create the quiz and the course to be able to get that. And then if you're a member of Earmark, you can just go in and take the course if you saw the live workshop, or you can rewatch. If you didn't get enough of us, you can rewatch it, and it'll be the webinar, not just the audio. So you'll be able to watch us all live.
Wow. And the quiz is not hard. It's just 5 or 6 different calculations about weighted average. You'll be fine.
You are scaring people.
Just kidding.
So next week, we are going to be talking a little bit about, I can't remember, but we have, I'll post it shortly, but we'll be talking about, I think what we're going to talk about is login issues, because we want to talk about the Intuit login and login process, which would be specific to you, Rachel.
Oh, that's my favorite topic. Oh my goodness. Okay, wait. So next week then is the 18th, and then I'm guessing we will be meeting on Christmas Day.
We'll take, we're not going to do Christmas or New Year's.
So the next week we have to have a fest.
Okay. I'll put my Santa hat on.
/Festivus / Kwanzaa, whatever anybody celebrates. So we have to have a festive workshop Wednesday.
We'll do snow for this.
Oh, it'll probably be snow.
There we go. Into the background. We've already got a fusty rural whites background. So we'll see that next week.
I can point it towards my window outside in Detroit, and I bet you there'll be snow on the ground.
There we go. All right. Thanks for joining us. We'll see you next time on the Workshop Wednesday.
And that wraps up another insightful episode of Workshop Wednesday, brought to you by Schoolofbookkeeping.com. We hope you enjoyed today's discussion and took away some valuable tips and strategies to enhance your bookkeeping practice. Remember, if you want to stay ahead in the world of bookkeeping and accounting, be sure to visit Schoolofbookkeeping.com. With a wide range of courses, resources, and expert guidance, you'll find everything you need to sharpen your skills and boost your career. Don't forget to subscribe to our podcast on your favorite platform so you never miss an episode. And if you enjoyed today's show, please take a moment to leave us a review on your podcast platform of choice. Your reviews help us reach more listeners and continue to bring you the best content every week. If you have questions or topics you'd like us to cover, reach out to us on social media or send us an email at support@schoolofbookkeeping.com. We love hearing from our listeners and are always looking for new ideas to explore. Thanks for tuning in to Workshop Wednesday. Until next time, keep learning, keep growing, and keep excelling in your bookkeeping journey. I'm Dan DeLong, and we'll see you next week.